Bitcoin ETF received $4.5 billion on the first day. Who has the final say on Bitcoin pricing? Hello everyone, my name is Brian Yang. We are specializing in selling mining machines. I am happy to talk to you today, but investment is risky and the market is uncertain. The content of this video only represents my advice and cannot be used as investment advice. Hello everyone, let's talk about two topics today. First, the Bitcoin ETF rises $4.5 billion in funds on the first day. Second, let's talk about the current pricing of Bitcoin. Who has the final say? Is it Binance or Wall Street? Let's talk about the first thing first. The Bitcoin ETF was approved last week. After it was approved, the numbers are still very eye-catching. How much money was raised on the first day and the BTF Bitcoin ETF was approved? $4.5 billion US. This number is still very large. After passing this time, of course, the performance of each institution is different. I saw a summary today, and the summary shows that the performance of different institutions is still different. But this grayscale is an outflow, and this company has a relatively large capital outflow. Then there will be more funds coming from institutions like BlackRock and other institutions. Of course, this time has also become a milestone for Grayscale itself, because Grayscale has since become a qualified ETF product operate in the market. The trading volume that day also hit a record high of 50 million shares. Of course, the outflow was relatively large. Basically, the purchase volume of other companies is still very large. Of course, the total amount added together, 11 companies added together, overall amount is about $4.6 billion. As far as BlackRock is concerned, it fell that day. The closing price fell by 4.6% and the price was 26. This is such a situation. Of course, during the launch of the Bitcoin ETF, there was also some opposition from various aspects. There was indeed opposition, and the most intense opposition actually came from the SEC commissioner. We know that the SEC held a vote, and among the 5 people, 3 people chose to approve and 2 people chose to oppose it. Among those 3 people, SEC Chairman Gary Gensler was also indeed. When being interviewed, he still said that passing does not mean that he agrees with Bitcoin. He still believes that there are many problems in the Bitcoin market and the encryption market. This is his point of view. Of course, there is also very fierce opposition, and SEC Commissioner also advised against the Bitcoin stock ETF through his article on ETF writing about, which is very detailed. He said that this is what Bitcoin passed this time. In fact, despite a large and growing body of evidence that this rule was not designed to prevent fraud or manipulation or to protect investors or the public interest. The SEC's order believes that this standard has been satisfied, then he strongly disagreed. He believes that, first of all, the global stock market behind Bitcoin ETF has a high concentration of fraud and manipulation and lacks of adequate supervision. This is correct. Even if you make an ETF, the stock market behind you is very complicated. Big problem. Firstly, he talked about fraud and operations. He talked about fraud and operations and gave many examples. For example, he said that especially for Bitcoin, for the analysis of 157 cryptocurrency exchanges. 51% of daily information on Bitcoin transaction volume is false. In fact, while Bitcoin reports often discuss the sheer size of the market, one of the stock participants seeking stock Bitcoin ETPs admitted that roughly 95% of participants were using data that was false and uneconomical. Indeed, in striking example, according to the testimony of one of his conspirators, the former CEO of FTX may have been involved in the manipulation of Bitcoin prices in order to keep its price below $20,000. This could be beneficial to his company and personally. In short, Bitcoin price and demand may not be as easy as they seem. And then he said, actually just yesterday, before we issued the approval order, one of the SEC's social media channels was hacked. Indeed, an authorized post falsely suggested that we had approved a spot Bitcoin ETF, and as expected, the price of the spot Bitcoin ETF went through the motions within minutes and hours after the false tweet. There was a violent shock. This is despite future law enforcement agencies revealing the effects of this misconduct. But I will be watching closely, as this is another attempt to benefit from future markets. The second thing is the SEC commissioner talking about was concentrated ownership. He believes that the concentration of Bitcoin ownership among spot holders also make Bitcoin investors vulnerable to the whims and trading behavior of few people. Analysis shows that Bitcoin mining and holding are very concentrated. This concentration can affect price movements in unpredictable ways, and investors have little information and resources to understand and price these risks. Additionally, large entities can create volatility and move the price of Bitcoin by exploiting arbitrage opportunities between a small number of related parties. This concentration is very ironic, he said, given that ironic is touted as a decentralized financial product. Of course, he also talked about stock trading. The crypto market, including the Bitcoin stock market, seems to be a breeding ground for fraud. One of the reasons is that this market have almost no systematic supervision and no adequate mechanisms to detect the market. This stock loan operation and Bitcoin stock trading are scattered across different international exchanges, and many markets are not meaningfully regulated. According to the Treasury Department, uneven and often inadequate regulation internationally allows virtual asset services and non-cyber actors to engage regulatory arbitrage and exposes the U.S. financial system to jurisdiction with weaker regulatory and enforcement capabilities. In addition, even in the United States, the supervision of Bitcoin's stock market is limited. This is the SEC commissioner. Of course, he also talked about this scale, the impact on this matter, and talked about futures and stock. He believes that this ETF is not the same type of product. Furthermore, arguments that rely on correlations in other regulated markets do not protect investors. It's just that you can't handle this matter by relying on others to supervise it. After a lot of content was said, the final decision did not take into account the wider public interest. This is he talking about problems that might arise tomorrow, which is important. We can take a look at the concerns about how these APPCs will operate after they are approved. For example, there is the questions of how escrow will be handled as markets continue to drive the process of physical creation and redemption. Funds holding volatile assets like Bitcoin may also be considered volatile, giving Bitcoin's higher volatility in the future. What would happen if the pricing fluctuations of a stock Bitcoin ETP, because the ETP to enter a pause due to the exchange's up and down mechanism? In this case, the underlying assets will not be affected by the trading suspension. Instead, he will continue to trade peer-to-peer around the world and trade on various exchanges. If the price of the underlying assets deviates further from the price of the stock ETP, it will cause investors to suffer losses at a time when they are suddenly uncorrelated, exposing them to risks they were not prepared to take. This is very true. Should Bitcoin solve this problem? But he concluded by saying, I'm deeply concerned about the passage of this today. I'm concerned that these products will rush out the market and go directly into the retirement accounts of American households, which are the least able to afford the widespread prices of Bitcoin in the stock market. The loss of sale caused by fraud and manipulation will affect ETG. I am concerned that today's action will put the stamp of SEC approval and regulation on the underlying stock market. In fact, there is no such supervision. I worry about the confusion surrounding what the underlying offerings of these markets actually are, and then investors may infer protection that don't actually exist. What am I worried about happened in the future? When new products that may be more investment friendly and have more risk for investors seek to be launched, we will hear that this series has become the hands of the SEC is bound by the new standards we set. I worry that today we are selling ourselves up for a few years tomorrow, and those who ultimately pay the price will be the investors we are responsible for protecting. This part of he is very known, but as a commissioner of the SEC, he wrote such a long article to express his concern. Yesterday, I also saw a friend talking about who owns the current Bitcoin pricing, because this market and this securities market transaction are in the same period. Within the trading period, he must have the final say. Outside the trading period, because most of the time the stock market does not trade and US stock market does not trade, he should still have the final say. Then this thing actually has many problems, but it is often during this process that it is gradually standardized. Anyway, I think from the perspective of an SEC commissioner, these questions raised by him are really worthy of our deep thought. We really still need to have a further understanding of the complexity of this market. That's it for this video. If this video makes you have gained something, please give it a like and subscribe. Your support is my biggest motivation for making videos. If you want to learn more about related knowledge, you can follow me directly or leave a message. Thank you for watching.